Hello, everyone. Welcome back to Navellier Market Buzz, episode 12. I'm Crystal Navellier, and I'm joined again this week with my father, Louie Navellier. Dad, looks like a gorgeous day in Florida.
Yes, fall has finally arrived.
So let's talk about the Chicago Fed president, Austin Goolsbee. He talks on Monday. What are you expecting from that?
Well, he's a very, very important Fed spokesman. Of course, he was the former head of the Council of Economic Advisors. Very likable fellow, does a lot of media. And he and Neil Kashari, the Minneapolis Fed presidents, are the big spokesmen for the Fed. And I suspect he'll say the same thing Neil Kashari said last week, which is that the Fed will probably be cutting rates in December at their next Federal Market Committee meeting. The We'll get a new dot plot at that meeting, and will signal how many more rate cuts there will be. The Fed remains very focused on the labor market. We did have a very poor payroll report in October, so if we get a bad November payroll report, the Fed is definitely cutting. And the question is are they going to cut much more in the future? Because market rates have gone up so dramatically that I think the Fed has to pause and not hike rates. In fact, my favorite economist, Ed Yardeni, is calling for the Fed to hit the pause button. But Jerome Powell, who also spoke last week, made it very, very clear that the Fed is still restrictive, which means that they'll probably cut at least one or two more times. So what's funny is there are times when the Fed presidents are out and about talking like crazy, and that started happening last week and will continue. And then there are other times they have to be quiet just before the meeting. So we're going to get a good feel for what's going on. And Austin is just, again, highly respected and a good fellow. So I suspect he'll reconfirm it. We got another rate cut coming. And hopefully that'll spark the market because, the market has, unfortunately, last week lost its mojo. We had this incredible Trump trade where the market surged, but we've given back all those gains, and it's just time for everybody to cheer up again. And we normally rally going into Thanksgiving, so hopefully Austin will give us that lift.
Other than builder confidence, building permits, and home sales, there's not a lot of economic news next week. Why do you think that is? Are you expecting anything to come up?
I think it's because everybody's leaving for the holidays, to be candid with you. So everybody's got other things in their mind, but consumer sentiment's usually very good leading up to major holidays. And as consumer sentiment rises, it rubs off on investor sentiment. So I think we're going to be okay. I think we're also going to see a lot of bargain hunters. A good example of one of the stocks, of course, that has been really massacred is Supermicro Computer. I already see that they're up in after market hours before the market opens on Monday. Of course, they have to file a plan with NASDAQ so they don't get delisted. And there appears to be some big institutional investors that are starting to buy Supermicro because this stock trades at only 5 times forecasted earnings. It puts the NVIDIA AI chips in the cloud. They're water cooled and they're very fast. And they had the lead over HP and Dell and other people who build server farms. So when a stock like that starts to bounce, it's a good sign it could lift the whole market.
Why have so many small cap stocks been hit with profit taking after announcing better than expected earnings?
That's a great question, and I think it boils down to how small caps move. Clearly, we had an early January effect. A lot of them exploded in the wake of their earnings. Stocks like GigaCloud, MPTI, the biggest was Sezzle, Sezl. We have Powell announcing next Tuesday. I'm expecting great things for it. They supply the power industry, the oil service industry, and they're helping build out the grid, of course. And I'm expecting spectacular earnings from POWL, which is Powell. But when we just stop and take a look back, these small cap stocks that they just move like rabbits. They sit, they hop, they sit, they hop. And I just think people have to get used to that price action. And it's unfortunate, but it exists. Oh, another one was Payments, which is PAY. That one shot up and now we'll probably rest for a bit.
Are you concerned at all by the warnings of the Trump tariffs?
Not at all. But those warnings are emanating from Europe. And I talked about this a little on Fox Business. the issue is that Europe is just horrified that Trump's going to jack the tariffs up on them, and they should be horrified because guess what? Their tariffs on our products are much higher than our tariffs on their products. So the automotive industry is a good example. When we export a car to Europe, they put a 10% tariff on it. When we export an SUV to Europe, they put a 25% tariff on it. On the other hand, when we import one of their vehicles, it's a 2.5% tariff. So we're going to have a showdown now. Either they are going to cut their tariffs to our level, 2.5%, or we're going to raise our tariffs to their level. So they have a choice to make. So a lot of the Trump tariffs are just for negotiating posture, okay? And Europe's already promising to buy more natural gas from America instead of having these tariffs. But we will see. I think Trump's just going to try to get the best deal he can, and this is what he likes to do. He likes to make people uncomfortable and force them to make a decision. And the other real bad press about tariffs is coming definitely uh, from Britain. It's funny, the whole world has shifted right, except in Britain, which shifted left. So they're going the other way. And they've been very, very vocal, as has Christine Lagarde, the former head of the European Central Bank. She was openly saying that Trump should not be president back in March, but he has been elected now. She's keeping her mouth shut, but she's trying to humiliate him in any way she can by picking on the tariffs. But the truth of the matter is the U.S. is more free trade than Europe is. And Trump wants to level the playing field. It's as simple as that. The other thing is he does want some of those manufacturers in Europe to possibly come back to America and set up shops. We have, obviously Mercedes in Alabama and BMW in South Carolina and Volkswagen in Chattanooga, Tennessee. But the other reason they might want to come back to America is we got cheap energy, cheap natural gas, cheaper electricity. And this has been killing Europe. The German economy is in a recession now. The Wall Street Journal had an article how they were the first victim of net zero because they jacked up their electricity costs and it destroyed their industrial base. And Germany has been outsourcing to Hungary, the Czech Republic, Poland, Slovakia, but I think Trump would like them to outsource to America. And of course, the European auto manufacturers are also very big in Mexico right now.
And what happened to the Trump trade?
I just think we had this euphoric reaction, but then what happened is interest rates kept going higher, and I think it's freaking everybody out. And that was the excuse to take profits last week. But we will get our mojo back. We traditionally rally going into Thanksgiving, so I expect that to happen. But basically, interest rates are pretty high now, and everybody's just scared of the deficits and everything else that everybody's warning about. On Maria show on Wednesday on Fox, I talked about how the velocity of money should pick up under Trump, and the velocity of money is how fast money changes hands. And I don't think the deficit will be a problem. I also commented that the people he's interviewing for Treasury Secretary look very strong. And of course, Howard Lutnick, the head of Cantor Fitzgerald, is one of his main advisors and leading the transition, and he dominates Treasury trading. So Trump has good people to make sure that Treasury bond yields don't spin out of control, but he's not in charge yet, so yields are rising higher in the interim.
Do you have any update on Vital Farms?
Yeah, it rebounded. It's funny when it announced its earnings, it didn't do that well because there's a bird flu on the West Coast, starting in Washington State. It seems to be spreading through California because the chicken is disappearing in the stores. But it's rebounded impressively. Of course, it's predominantly an egg producer in Austin, Texas, and organic egg producer. So it came roaring back, and its forecasted sales and earnings remain stunning. The main thing though is when you're in the chicken business, you don't want the birds to get sick because then you gotta kill your chickens and then get a whole new set of them. So when you have egg layers like Vital Farms does, you don't want to have to do that.
Well, thank you so much for answering all my questions, and thank you to you all for liking and subscribing. We really appreciate all your comments. Once again, if you have any questions that you'd like us to address next week, please leave them in the comments below. But until then, thank you so much.